Hi guys, welcome back to Be Rich. If you notice today, even Kesav seems to be missing in action. I don't know where Kesav is, but he seems to have given us a miss today. So I thought today I'll pull someone from Anand's team. Our man is a budding accountant correct, Karthik.
Yes, sir.
Karthik is an accountant aspiring to become an auditor,
Yes, still in the process.
still in the process of becoming an auditor.
Yes.
Yes, so I thought I'll pull in Karthik and we'll have a conversation broadly about things that's of interest to Karthik and maybe be interest to you guys. I do know some of you guys are really what you call savvy in finance and do find my conversations sometimes rather dry and boring or too basic. So do please be kind. I do try and engage at the levels where I am at and at where Karthik is at. We are not nowhere near Anand, what Anand's knowledge is, his understanding and his nuances of economics are. We are completely green compared to Anand. But we do try and engage in conversations that might be of interest to people who are just about getting into understanding how to invest and how to make their money grow. What do you say, Karthik?
Sure, sir. First of all,
What are we going to talk about today? You had some things on your phone,
Yes,
which
sir.
we had already started talking before our
Basically depends upon the comparison between the US as well as India. As the inflation increases simultaneously, the repo rates were increased in US as well as the
correct.
RBI increased that repo rate.
Yes, I'm pulling
And
down the chart which you sent me,
yeah,
which was very interesting. It was a very interesting chart which you had put together for us. Hopefully, my editor will throw it on the screen so you guys can also see the chart right about now. Okay, so what Karthik has shared with me was comparison of inflation between US and India and market movements. So he's taken it from a snapshot from Feb 2022 to all the way to Jan 23, to year 2023. And if you look at the Indian market, it's really not gone anywhere. So Karthik was curious to know why is the American market corrected so much while the Indian market seems to be going nowhere. Is that what was your question?
yes, the main thing, because as the repo rate, well, comparing with US and India, while the Fed increases the meeting simultaneously, the market reacts, and as like gravity, it pulls down the market. That is the basic thing, and to reduce inflation,
That's how we are basically understood.
yes, that is the
What is supposed to be normal reaction of the market
what should
is
be in the books
as
as
money
per.
gets more expensive, people have less money to invest. So investment going into the market kind of slows down. People are pulling their money and holding because EMI rates, everything is going up. So because that investors are pulling money out, so the markets have to cool off.
Yes,
Is that what you're saying? Correct?
yes, as per US, as expected. But while comparing these to Indian markets, it was completely different.
Correct.
Even the rates are increased simultaneously, but our markets were 5% up when
Correct.
compared to those. And
Now let's talk about why is US moving like this and why is India not moving like this.
yes,
If you look at Indian market size to US market size, US market size runs around a 21, $22 trillion market. India's, in meanwhile, is very small. Compared relatively, it's hardly $3 trillion.
okay,
Okay, so if you see sizes, you're comparing an elephant to a mouse. Second thing, America has an advantage. They're sitting on the reserve currency. We don't have a reserve currency.
yes,
Our market is very, it is, if America catches a sneeze and cold, we all catch fever. That's what Anand keeps saying. So it's our markets are like that. So if you look at it like that, we are very dependent on the American market. And in the American market, if you see, the retail investors participate in the market in a large percentage. If you compare that to India, the retail investors like you and me participation in the market, recently only percentage wise has gone up. But if you see the complete history of our stock market, which is very small compared to the American stock market, retail investors in India are very small percentage. Majority of the investors in India are foreign investors and domestic institutional investors. Domestic institutional investors who?
LIC and
Just not LIC, your pension fund, everything, government related, mainly government's hand in the market is domestic institutional investors. The other is foreign institutional investors.
okay, sir.
So the Indian market dynamics which you're seeing is no reflection of the real economy happening in India. While the stock market kind of reflects what's happening in the US to the American economy. The same kind of ripple effect is what you see the market, if the economy is becoming bad, Indian stock markets do not depress.
That is the reason I'm asking you to this question. You said that if America got sneeze, India will get fever. But this data doesn't show like that,
Correct.
right?
It does show. If you're looking at the wrong data, what you should look at it is the foreign investors. What was their holding in Feb 2022? What are the foreign investors holding now today? There's been a steady exit of funds. Foreigners have been pulling their money out of India, and that is being replaced by Indian domestic institutional investors. Yes, I don't want to get political and say why are they doing this and all that. I don't want to get, but it is just the parcel being passed from one guy to another guy, which is holding up the market. If the domestic institutional investors were not pouring money into the Indian market would go down like that very fast.
Okay.
Because foreign institutional investors right now don't have appetite for leaving money in India.
Because they get more interest in
Because
US.
their money borrowing is becoming expensive. Because let me tell you, US was lending for a very long time before the interest rate went up. You could borrow money in the US for 0% almost. At zero.
Okay.
What does 0% mean as an accountant? When I borrow money at 0% means what?
There is no interest.
That means you're paying nothing for that money. It's free money.
Yes.
I borrow 1 lakh and I'm paying 10,000 rupees a month. Right? Within 10 months, loan is over.
Over.
I have to pay zero interest. So I can borrow money like that. Just bring it and leave it in India.
Even this increase in that INR versus USD will gain more.
Correct. Even if you peg against this fluctuation, which you correctly said, the rupee depreciating and all that you take, you still can't make 2-3%, 4-5%. Now suddenly the cost of borrowing is becoming expensive in India. That too with Indian rupee fluctuating and dollar strengthening and all that is going on. If you look at the calculation now, it's not good to leave money in India.
Sure.
So what do you have to do? You have to pull your money out. You have no choice.
Okay.
All may be true. All our talking heads are saying everything Indian economy, whatever they're saying is good, it's robust, it's growing. Yes, all that. But as an individual investor, if my borrowing cost is increasing and the fluctuation in the foreign exchange is going up, becoming more volatile, I can't afford the risk. So as a foreign investor, I have to
Withdraw the money from the market.
So when that starts going, price starts going down, and you are correctly saying Indian market, let's say, is good. All what is true, let's say, fundamentals of India are strong. It's only growth from now on. Ra Daily also recently spoke in some forum and said India is a golden star. Something he said, which our newspapers all caught on and they all went like this. So let's say Indian economy is very good and robust. As a domestic investor, it's good to leave your money inside. So you're getting at a good price, you feel. ITC was going at a very steal price, no?
Yes.
So as a domestic institutional investor, you'll park your money there.
But as the price increases, the ITC dividend of the ITC may come down.
Yes, ITC is one share. But if you look at the whole gamut of companies in India, lots of them have become cheap.
Sure, sir. Except ITC, one of few companies, most of them.
Yes, ITC was cheap for a very long time.
Sure.
Now it's gone back up. So now it's hindsight bias. Hindsight bias means when you're driving the car, looking back, you see, okay, the road was good or bad, you're able to see. Anand's been telling you to buy ITC for a long time. If you had bought it that time, you would have seen dividend, not only dividend, you would have seen growth, incredible growth in your investment.
Anyway, I had some ITC on those days and just sell it off around 300 itself, sir.
You booked profit. There's nothing wrong. Lots of people have booked profit. That's why ITC price keeps correcting now and then. Because lots of people bought ITC at 120, 130 like that. Bought a huge chunk. Now it's gone appreciated. They want to diversify. Instead of holding just ITC, they want to move their money into other things. Those guys will probably be like you, one retail investor, maybe liquidating those positions. There's nothing wrong in booking profit. Though I don't believe in it. I believe you should only sell when you have to sell. Not sell just because you feel like selling. But this is the main reason there's a disparity between what's happening in the American market and the repo rate which is happening there and what's happening here. Answer me this simple question.
Okay.
30 lakh,
Okay.
20 years, 8%. What is my EMI, monthly EMI? Ting, 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 ting.
It's around 25,100, sir.
25,100.
Yes.
Is that an exact number?
Approximately.
Don't give me extra, give me exact.
25,093.
Correct. 25,093 is what I'm also saying. So now make it 9%.
It's 26,992.
Okay. Now what is the difference? That you can tell me approximately. I'm not going to torture you telling me exact numbers. Though you should, since you're an accountant, you should be able to do this in your head.
The difference between is 1,900 per month, sir. EMI increases up to 1,900.
Yes. This is where the problem is. This means last year to this year, your monthly expense has gone up by almost 2,000 rupees. This is lower middle class, I'm talking about. 30 lakh loan is not a middle class loan. A middle class guy will not be buying 30 lakh flat. Who buys a 30 lakh flat now? And that too, where do you get 30 lakh flat? Do you get it here in Raipeta where we're staying?
No, we
Where
can't.
will you get 30 lakh flat?
Initially, I'm from Namakkal, and those areas we can afford a house around 40 lakhs. For that, we can go for 30 lakh loan.
Correct. So you have to buy a house in Namakkal. So you're talking about people who are of lower middle class strata. That means they have a home there and they're sitting in Chennai, staying on borrowed money. Not borrowed money, they're staying in a rented accommodation, like a bachelor like you, and they're hardly earning 30,000-40,000 rupees, and they're having a loan, right, of 25,000 rupees. Last year they were paying, plus a bike loan. Bike loans are also gone up, but we won't get into that. We're just talking about home loans now. So that's
Because those bike loans and all fixed, it was not a floating most of the time.
most of the times. Some idiots have been thought they were smart and they did some. We won't get into those guys.
Okay.
But like you rightly said, those are all fixed. But this, what you are paying, your rent has gone up, petrol has gone up. Now, to a layman, 2,000 rupees may not look like nothing. But when you see the bigger picture, that 2,000 rupees is a lot of money.
Over a period of 20 years, it's a lot of money.
Lot of money. And forget 20 years. It's a problem for you for the next, till things stabilize again. You're not getting a salary hike.
Yes.
Correct. Inflation is killing you. And now loans are becoming more expensive. And if you look at it for an normal income family, let's say a guy who's buying in Chennai, okay, the same Namakkal which you're saying, in Chennai, how much do you think a lower middle class family's flat will cost? 60 lakhs the loan will be?
Sure, sir.
Okay, so 60 lakhs, if I look at it, the EMI cost has gone up almost by 2,500, 2,600 rupees. Correct?
I think for a 60 lakh loan for a tenure of 20 years, it will be 50,000. Nearly around 3,800, sir.
Yeah. So imagine, how are these guys going to manage?
Is there any remedy to resolve?
Yes, the remedy is, if you are smart enough and your bank allows you to do a part payment, make part payment.
Whatever it may be, even it's a 10,000 or 20,000, whatever it may be.
Whatever you can afford part payment, and don't reduce the tenure of your loan.
Don't?
Reduce the tenure,
Yeah,
meaning the length of your loan. What the bank will say is, okay, give me 5 lakhs, instead of it being a 20-year loan now, it will become 18 years. Don't do that.
Okay.
Reduce your EMI.
Okay, sir.
Reduce your monthly burden. If you have some free cash sitting around, give it to your bank and reduce your EMI cost. Bank will always want you to reduce, because it's getting tight for the bank, and the bank's also scared you're not going to repay. He rather reduce the length of your loan, the tenor of your loan. Instead of making a 20-year loan, make it a 15-year loan, make it a 10-year loan.
Anyway, they are getting a fixed amount of EMI.
Correct. He doesn't want you to reduce the EMI.
Okay.
He rather you reduce the number of years. But you tell the bank, boss, you keep my years but reduce my EMI. So the amount of burden on a monthly loan comes down.
With that extra free cash flow, you can repay it sooner.
Correct.
Compared to normal.
Correct. If you can lower your EMI, somehow lower your EMI. Because the fire is right now.
Still, like
20 years time, loan rates go like this. Your career goes like this. Your salary will also go like this. There's definitely 20 years time you will not be earning this little. You'll be definitely working in a job, and through your other investments which you smartly would have done through Anand's influence and everything, will have enough sitting. So this 20-year, this loan won't be a problem. It is only a problem today.
Yes.
So the solution for today is to lower the fire. To lower the fire means lower the EMI. Bring it to a level where you can manage. And all of us will have something. If you're a bachelor, you will have something unnecessary sitting. Maybe it might be some gold sitting. Gold is at a good value right now.
Yes.
Okay, it's not, I'm only talking if you're a bachelor. I'm not talking if you are married and you have daughter and all that. There's a
No,
difference.
I'm just right now I'm
Bachelor. So you can always buy the gold again. You can buy little gold again. But right now, I would rather you reduce your EMI. So get rid of whatever assets you can and lower your EMI. Best would be if you can get rid of the flat.
Out of the flat, in the sense you're selling to sell the flat.
If you can make a profit on it. But the real estate market is so bad right now, you will not be able to make a profit.
The thing is, but see, the house was bought mostly for a sentimental purpose. Instead of,
That's a wrong purpose.
see, so I can understand as a financial.
But it's not bought financially viable then. Whatever is bought for sentimental reasons is never financially viable. Because the reason why you're telling me it's sentimental is because you know that it's not financially viable. Because if it was financially viable, you wouldn't have told me it was a sentimental reason I bought it.
So as of now, we don't have housing loans and that thing. I'm replicating the most of the mindset right now.
I agree. If it is for sentimental value,
Then we don't bother this cost at all.
there's nothing you should have in life which is sentimental. Okay, I don't believe in sentimentality. Sentimentality is your memories. Okay, don't hold on to things.
And as Yuan Keso has discussed it, even if you doesn't know the markets, try to invest in the index funds,
Yes.
which replicates the market.
I would not even, like you said, you're saying why not smart Nifty, why not Nifty Bees? If you have knowledge, you're able to understand, and you've read Anand's books, and you have some basic, then you can diversify by saying 500 rupees this month I'll put in Nifty Index, 500 rupees I'll put in Nifty Bees. If you're completely a zero, please do not do all that.
My question is, instead of going for a large cap index fund or Nifty 50 index fund, rather we can go for a mid cap or a
No.
small cap index fund? I'm not.
If you know what it is, most people which are watching TV doesn't even know what a cap is. What is market capitalization? You tell me.
Market cap, for example, if a market capitalization of Reliance Industries means total number of shares which is replicated in the balance sheet multiplies the current price of the shares.
Correct.
That is market cap.
Now, how many of your viewers do you think know this?
Uh,
They don't even know how. Do you know how Nifty shares the companies are selected for Nifty?
Based on some sectors, but it was
Don't give. When you say I am proud to say I don't know, and I don't know something, you know what I say? I don't know. If you know and you are willing to learn, sure, read about small cap, large cap. But instead of doing that, like what Anand says, if you are so interested, learn a little more and invest in that company directly. Why buy a small cap, a medium cap, large cap, which is buying ITC? You might as well buy the ITC directly yourself. Correct? Why do you need me to take 2%, 5% from your money to buy the share for you when you can buy it directly yourself? You have a demat account, you have a trading account. Correct?
yes, sir.
What's preventing you from buying it?
I don't prefer the mutual funds, but rather than going for a index fund which is large cap, how about small caps?
No. I'm just saying, if you are a novice, if you are a viewer and you're a novice and you do not know anything and you're just starting, keep it simple.
Okay, sir.
First bike you buy, motorbike you buy, you don't want to buy a Ninja, Kawasaki Ninja. It looks really cool. But you get on that and you rip, that's it. Straight to heaven you'll go. You'll be counting gates of Vaikuntha saying, go in the. You start in a simple TVS 50, you start.
Yes.
Start cycle, get confidence, get TVS 50. Slowly, you might have the money, but slowly you get up to riding the Ninja. Confidence.
Sure.
It's all about confidence. Confidence comes from experience and knowledge. Gain it. That's why I'm telling all the viewers. I'm not saying do not invest. Definitely. There are shares which you can buy, like you said, ITC correctly. Not only ITC, there are many companies. Anand's favorite is ITC. There are many companies like ITC. We can sit and go threadbare discuss each one. That'll be fun. I don't know how many people will be interested in that, but you can discuss, which are all good buys right now. But I don't want to sit and do that. People should learn about it, read about it, then make a decision on it. Not just because if you listen to some talking heads say Adani was corrected by 20%, will you go buy Adani now?
No, sir. Right now, even it was corrected to another extent of 80%.
I will, even if it corrects by 100%, I'll say I won't buy it. Why Kingfisher is corrected by 100%? Buy Kingfisher now.
No, we can't.
Why all Anil Ambani's companies all corrected by 100%?
Then it becomes zero. Sir.
Now it's all very easy to say and laugh at it. There was a time when it was falling, a lot of people went and bought it. Because they had looked at all these people sitting on TV telling it is corrected, it's a good time to buy, it's a good position. Really?
No, sir.
Do I know? I don't know. I don't recommend. I am always scared to recommend because I don't know. If I know, sure for sure, and I'm putting my own money in it, sure. How many of those guys who are talking, do they put their own money in it? How do you know?
No, sir.
They could be shorting it while they're telling you to buy it. For all you know.
Yeah. But as of now, we don't expect someone to tell the truth.
Exactly. So in that kind of a situation, that's why I say buy index fund. Because like I've explained to Kesav, index fund, you're betting on Indian economy. You're betting on the Indian country. You're not betting on some family. It's not a Tata or an Ambani or a Adani or you're betting on. You're betting on the Indian people and the Indian economy. You're not betting on BJP or Congress. You're betting on whom?
Indian economy.
Indians.
Okay.
If you can't bet on them, then you can't bet on anything. You might as well keep all your money in a mattress and keep it in the house. If you don't have an appetite for that risk itself, you can't even bet on your own country, then you can't bet on anybody.
Okay, sir. And I'm glad to say that before joining here, but I feel somewhat difficult to how to buy bonds or how to invest in bonds. But as of now, after coming here, it's a tedious process, and with help of a
The
group.
reason why it's a tedious process is because the bank doesn't make money on it.
Okay.
Anything which is easy to do, they will always make it difficult to do because they don't make money on it. If they're not making money on something, why will they make it easy for you? But bonds is nothing but to buying an FD.
Yes. Instead of buying the FD from that bank, we are going to buy.
Correct, because FD, he's making the money. So he wants you to do the FD. That's why he'll put red carpet for you, call you, give you one watch free, give you some, token free, give you 2 movie tickets free. But if you want to buy his bond, he'll make it so hard to buy it. But he wants you to buy the bond because he needs the money. Bond is also finally borrowing money only.
Yes.
But he wants that, but he'd rather not you do that. He'd rather do this first. Why? Because he's making money off you on the FD. Bond is not making any money off you. He's paying you. You are making all the money.
While comparing with bonds, corporate bonds, what about NCD, sir? We can afford it because corporate bonds we can afford at least a minimum of 1 lakh.
Yes, but here again the same problem lies for the public, right? How much do you know? Who do you believe? Like when you're buying a share, I'm telling you to research. Same way, how many people research about the company's bond they're buying? How do they know the promoter? There are bonds which have disappeared now.
Yes.
Then what will happen to your money? Your money can disappear there. At least in stock market, if only 500, 400 rupees are disappearing. In bonds, lakhs can disappear, man.
Yeah, for that, Anand sir used to recommend that government bonds like.
Anand is recommending. Or am I Anand? No. Are you Anand?
No.
So who will you go listen to then?
No, sir, we can't. I'm just
That's why even bond I do not recommend. Unless you know what you're doing, don't buy bonds. Unless you can you have someone you trust, so who's knowledgeable like Anand. You can trust him, then do it.
I think bond is more riskier when compared to equities, I think so.
No, bonds are not more risky. No. The person who loses all their money is always the equity. If you see the Indian system, when a company goes kaput, as an accountant, you should know this. The person who loses all their money first is who? The equity holder always loses all the money. The person who stands to gain whatever money is possible to get back is the bond holder.
Okay. Whether it was secured bonds.
Correct, secured bonds.
If it is unsecured bonds, even depends upon the.
Correct. But he's paying you more money for it. That's why it's unsecured.
Okay.
It runs on faith. Do you trust him? I won't.
What about NCDs, sir? This finance.
I don't know. I won't. You've heard Anand say this many times to you. So be smart about it is all I'm saying. I cannot say names. I would not say names because then people will believe me for it and they'll hold me to it. So I don't want to mention names. So don't keep on pushing me and goading me to mention names. I'm not going to.
No, and I'm asking about. I'm just comparing between NCDs and bonds. That's it. Where we can invest a minimum of 10,000 or 1,000. It depends upon the issue. Per issue, we can afford at least a minimum of 10,000.
Sure. If you have the appetite for it, sure.
I'm expecting a pinpoint answer, but you are
I don't want to give a pinpoint answer because I'm not supposed to be giving pinpoint answers. I'm not supposed to make your life easier here.
Sure, sir.
If every time the maths teacher tells you all the answers, then what will you learn? Some of it I must leave for you to try now and figure it out.
Okay, sir.
But we'll do a separate video on NCDs comparing to bonds.
Okay, sir.
Because this itself has pushed over 30 minutes and engineering will have a tough time chopping this into pieces. Yeah, and I think most of our viewers would have checked out by now.
I don't think so. 30 minutes were passed away.
Yeah, but show feels like that if I'm looking at the clock.
Sure, sir.
But this is an interesting conversation. I think we covered about mostly all the things you were
Yes,
interested
sir.
in talking about today. But my thing for you is, if you have any loans, in the current environment, try to get rid of your loans. If you have a home loan, a bike loan, a personal loan, get rid of the personal loan first because that's the most expensive.
Sure, sir.
Okay. After that, get rid of the bike loan because it'll be the easiest to get rid of. Then if you still have more money, lower your home loan. And if you have any credit cards, cut them and throw them away. Do not use credit cards.
Okay, sir.
Unless you're rolling in a lot of dough. You have a lot of money and you're able to pay a credit card bill whenever it comes. Every time they give you a credit card bill, you're paying it full. Then okay. But most people don't do that. They try to roll over the credit card.
We used to utilize at least 10 to 20% of credit card limit. That's it. Which is not even part of.
Not in this current environment. Because current environment, you do not have job security. You do not have money security. Things are getting more expensive. You do not know when you'll suddenly have, and banks can suddenly say, I cancel your credit card, pay it up and close it. What do you do?
That I can't afford because my due is around 1,000 or 2,000. That's it.
Yes, that's you. You're lucky. You're a smart boy. There are many people who are like Kesav who are not so smart, who are doing from one app to another app. Today also RBI has cancelled some some small banks
License.
licenses have been cancelled. You do not know. You do not know what's going to happen tomorrow because the environment is such.
Okay, sir.
Globally also, it's just not in India or this part of Tamil Nadu. Globally, things are little foggy and little crazy right now. So I'd say be careful. Keep your money tight and don't spend unless you have to spend. I'm not saying don't have fun. You're not going to get back this year. You're not going to be 22, 23 again, right? So do enjoy it, but keep in mind that you do want to live till you're 30, 40, 50, 60.
Okay, sir.
So that's why I'm saying invest. Anyway, this has been an interesting conversation. We've dragged it on for quite a long time. I don't know if Vedran will chop it into two or torture you guys with a long stretch. But anyway, I hope you guys enjoy the video today and do subscribe to our channel and do share it and spread the word around. And next video, I'm sure Anand will be back and Kesav should also be back. And maybe we can have Anand and Kesav go at it. Thank you for watching Be Rich.
It'll be a nice time to spend with you, sir. And be subscribed to Be Rich and like the channel if you like this video. Thank you.
Thank you, Karthik.
Thank you, sir.
After a successful event in Qatar, my team wanted to find out where to do an event. So they did a recce, they did a survey, and they found out that they would go back to my second home in Saudi Arabia, Dammam. So after nearly 30 years, I'm going back to Dammam. The last time I was in Dammam was in 1990, and I'm going back there to do an event on the 10th of March. We have not yet decided where it will be in Dammam, but definitely I am visiting Dammam on the 10th of March, Friday. So those who are in and around Dammam or maybe in Jeddah should make a trip to see me, and I'm going to talk about investments on where you should put out your money. Those in Bahrain can drive across the causeway and join us. See you in Dammam on the 10th of March. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.